The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman on this first day of November, Monday, and Tiger Technicians Hour, what we're looking at. First of all, thank you, Tommy Jr., for your great show earlier on. And now we're going to go to the Dow, which is up 61 at 35,880. Leg E in the Chapman methodology, 36,009. That was the our premise was that the 35,900s could offer quite a lot of resistance. This is one day, so we can't even talk about it. But in fact, that's what often happens at the millennium level. And what's really happening at this particular point is that we're calling this a leg E. In the Chapman methodology, let's just go through this here. We try to identify the lowest low bar and then count each successively higher peak. We alphabetize them sequentially, A through G, but it's at that fourth highest peak A, B, C, that fourth highest peak D. Where other things can happen, yes, it could go higher, but that's where we kind of raise our foot off the accelerator, hover over the brake, and assess exactly what's going on. And within that context, look what happened at peak D at 35,892. There was that very sharp sell-off. That was like Tuesday. That was Wednesday. And then what happened was there was a comeback. And now we're in leg E, but the MACD, the moving average, is outstanding. The 9 period is way over the 14 period. So the 35,636 is the 9 period moving average support. And then 35,475 is the 14 period exponential moving support. And they are way above one another. And the price is way above the green 9 EMA. The stochastic's very good at 89%. Actually, I should say it's excellent at 89%. On balance volume is in leg D, but it's getting a tad overbought. More importantly, what we're looking at is within the context of the weekly chart, it has not yet crossed positive in the MACD. So if that were to happen, that would be like another burst of energy to the upside. But if it deflects low, because this week we start to see some kind of selling pressure, doesn't have to be a big deal, but some kind of selling pressure. Stochastics at 89% in the weekly chart, still very good. On balance volumes a tad overbought. And that monthly chart, the monthly chart, this is just unbelievable. Every month I say the same thing. Monthly chart is extended leg E. It doesn't matter by how much it does, even if it's by 1 penny. 35,892 was the previous high. This high is 36,009 in November. Therefore, this leg E is continued. I'm going to say it again. I know it's hard to believe. There is a chance that this becomes an instant restart. But no, I'm just going to say at this particular point, more likely we get some kind of a digestive phase for at least a 2-week period in November. We'll see. S&P is right now, S&P is trading at an all-time high. It is at 4605.06. Let's see. 4620.34 was the intraday high. So it's a little bit off that high, 20 points off the high. Now, what's really important is that it's made leg B in the monthly chart, leg E in the weekly chart. So we're looking at this askance and saying, well, it's an incredible thing that from March of last year, you've had only one nominal peak, peak A, and you still haven't made a peak B. Hey, that's the way it goes. Not going to fight for that. QQQ. 1, 2, 3. There we go. Invesco QQQ Trust Series. This is the NDX 100 trading vehicle. It's down 97 cents at 385.60. Made an all-time high at 386.63. Now, because of everything that I'm looking at, the MACD is strong. The 9 is way over the 14. The price is way over the 9. The stochastics at 94.93%. The on-balance volumes overbought, but at highs. The relative strength, this little gray line here, is positive. Everything here is positive. So all I'm saying is that I'm anticipating there will be a peak C at some point in the next day or two. Then there should be a leg D. And then I think we have some kind of a choppy sideways some kind of a pullback. And that's really what I'm looking at. I don't know yet about a deeper correction, but at least some kind of a breather. Look at the IWM. Very good action here. IWM, strong move up 3.17 at 231.22, up 1.4%, when the others are just barely higher. This is good action, and it says leg C in the weekly chart, still great leg C because it's within the context of a rectangle formation, which can last a lot longer than your patience. After all, March at 234s. It slumps down to the 208s a month later, and then it goes into a sideways trading band. Hasn't made a new high, hasn't made a new low, just stuck. Let me extend this rectangle sideways. There it is. And we're looking at, and you can see it's peak C1, peak C2 in the Chapman wave, meaning that it just fractionally missed going to a D. The technicals indicated that it could go to a D and they pull back. So we call that a phantom peak D. So it goes C1, C2. And now we're making a cup formation, attempting to get to that leg D. It happens. So this now, is this a brand new leg A or is this an F? At least for now, I'm calling it an F. Nothing to do. We don't have it. We used to have it. Gosh, we had it at 173, ran all the way to 229, the IWM Russell 2000 small caps. Then we got out of it, nice gains. And then it all of a sudden turned around and ran all the way to today's high of 230. 1.43, outstanding move. Anyway, we're not in it at this particular moment. I do the SMHs because we always look at the SMHs as a key. Don't type it into the chart. Type it onto the, there you go, SMH. Semiconductor index, the market vectors, ETF, doji candle, leg E, underneath the previous high of all-time high of 276.69 on the 16th of August, slumped down to the 240 level back in early October, and now it's had a beautiful October going all the way to 272, and now today it's up at the 273.88 level. A recovery high, it hit 275.04, just less than 2 points away from an all-time high in a V-shaped pattern in the weekly chart. It should attempt to get close to that level again, but I'm watching this to see if there's going to be some kind of a reversal to the downside. Let's go to gold. Gold is quite nice here. It's up 10 at 1793. I said it's stuck in a range. The 200-period exponential moving average of 1802 should become a magnet and just keep attracting the price. And when it closes below 1780, that becomes a repellent, and that'll be a problem. Right now, it's an attractor. It's bringing the price closer to the 200-period moving average. Weekly chart says rectangle formation. But we'll see what happens. Look, the silver is acting quite nicely. Not great, but acting quite nicely. And if you look at high-grade copper is weak, just weak, down at 4.36, down 0.07. It made a peak D. Remember the Chapman wave methodology peak D is where you start to become a little cautious. And yep, we went from 4.6855 to today's low of 4.3285. I like to do this. I'll do it together with the wood, the iShares, global and timber forestry ETF, making the lowercase h that goes to a lowercase m, and then it makes it even a third one. Let me just draw this in right here. There's your first h. There's your second one that makes a lowercase m. And there we are. So it's testing key support in the 84s. It's 84.76. Nothing to see here at the moment. That is spectacular move, and now it's digesting gains. I'll be back in a moment. Dow's down up 88 points. It's down 1.5. Right.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, so let's just go through a couple of things. So the TLT is down $1.83. That's 145.85. And what I was saying to subscribers over the weekend, when I did my my video overview on Saturday, is that within the context of the yields, it's going to be really important, because if the TLT slides under 144, that's going to be a real problem. That's going to say, you know what, yields are going higher. And if it manages to get to the 149.50, 152.20 area, that's going to suggest, even though it would be a leg D, that would suggest that the yields are actually going to start coming down quite a bit. So they're right in the middle of this trading band between 151 and 141. Well, actually in the lower area. They had been in the middle at the 148s. And this 200-period moving average of 146 is going to either be an attractor to pull it back, to bounce like a yo-yo to the upside. And that would be very important, because you'd finally get a cup formation right like that. Or you're going to get yet another larger arch formation, and that's going to fail. So the numbers are just simple. It's only numbers here. It's not what we guess. It's what it does. A push into the 148.50 says, watch out. Yields are coming down, but the TLT is in play on the upside. Is that going to also determine the fact that when the market starts to get choppy and prices start to come down, money flows into, maybe I shouldn't say flows. It does flow sometimes, but let's just say it migrates to the safety of bonds. That's all. We don't know. You can look at the MACD, and the MACD suggests it should go higher. Stochastics at 84%, it suggests it should go higher. The on-balance volume is very weak. It doesn't say anything. It says struggling. Relative strength has started pulling back. So there's kind of a mixed signal in the daily, but there's no mixed signal in the weekly. You're just making lower highs and lower lows. It's as simple as that. What was this? Yeah, this long wick. Oh, that's the wick that I put in to say that you could get a 1-to-1 to the downside. Let me move it to the side. So that's what it says. Yeah, so that's not in play right now. And then if you look at the monthly trend line, you keep bumping into that resistance level. So it's just real simple. So anytime in November, if the TLT starts to trade in the 151 or higher area, that suggests that yields are coming down, and they're going to come down quite significantly. In the meantime, they're more at the higher range. That's really important to look at. Why? Because if you look at the HGX, which is the Philadelphia Housing Sector Index, it's had a really nice move to a peak D. It's stalled. It's making lower lows and lower highs in the weekly chart. Monthly chart is still bullish with a peak B, but holding the 9 and 14 period moving average, even though the technicals are not that great. All right, so let's do a couple of things here. Just things that popped up in the den. One was no, I haven't finished. Sorry, crude oil. Let's get to the crude oil. Crude oil had a very nice move today. It's up 97 cents at 84.54. The continuous contract, it actually hit 84.88. We're looking at this potential V-shaped pattern that could break above, and that says, whoa, if it starts to break above 85.41, is that a brand new A or is that an old F/A in the daily? The weekly chart extends leg D/B. At this point, I still think it's kind of more like a B, and that we should have a decent pullback and then go to C and D, because oil's in play. There's no question about it. Look at that monthly. It did this double top in the 85 area. Is it going to break above it? Well, we'll see. So far, November hasn't seen. The trading in November is a full 35 minutes into 37 minutes into the new month, and we haven't yet made a new recovery high in the monthly chart of the continuous contract of crude oil. So we've got, let's see, we've got how many hours to go before the end of November? We've got all those hours to go before it can extend leg D. We're watching this closely. So for subscribers, we did get a short position the day after the high of 85.41. We got it at about 83.35, not bad, just a little more than a point from the recovery yearly high. And it did pull back quite sharply into the 81 area. Now it's bouncing. We'll see. We've taken a little bit off for a nice percentage gain. So we're using that as a bit of a cushion to see what happens. This is a tough one. The MACD is weak. The stochastic is very weak at 71%. On balance volume is very good, a little overbought. And the 9 is way above the 14, and the price is way above the 9 and 14. And it's in the up channel. There's nothing to see here that says big negativity here. It depends. If we had closed sharply below 82, that would have said, it's all over. But now it shows residual strength. Right. The next question I had was, over the weekend, could I look at the IYT? The IYT is the iShares Dow Jones Transportation Average Index Fund. Made a peak B in the monthly. It had an E, 287.40 the week of the 14th of May. That was the high, all-time high actually, and then it plopped down to the 241 level. I would say 46 points on a $287 stock is a big percentage pullback. Then it runs to a peak C, and it's held there. I'm wondering, over the weekend I showed CX. Did I show CX? Not CX. SCX. So, not SCX either. Why am I doing this? What a nice chart. Stare it. Nice move today. Up 10%. Up $1 at 11.12. SCX. Write that down somewhere. SCX. All right. So I'm looking at CSX. That's the rail company that I meant to show. And we discussed that. I'm almost sure I did this. And CSX, that's the rails, went to, I believe it was an all-time high. You just never know the way these things are. Yep, all-time high. A real all-time high. And that all-time high on Friday at 36.45 sees a 41 cent pullback today at 35.77. Single leg 8 to the upside, or is that an E/A? I just don't know yet in the weekly chart, and it's an E in the monthly chart. So this is really what's been helping the rails have this big strong move, and that was some of the IYT, that is the transportation index, had this big move to the upside. I'm watching this closely because, if you have shortages, if you have problems getting things offloaded so the trains can take them, that will impact the IYT. And if you look at JETS, which is the global US ETF for jets, for airlines, a nice move today at 42 cents at 22.64, up $1.89. But what a big pullback from the 25s down to the 22s. And now this is a kind of a counter trend bounce. We want to do a couple of things here. I've got questions. I want to get to them all. Just real quickly in the den, there was a question about, on computer. Yeah, this is semi-computer. All-time high today at 54.75. They agree in the daily chart. They've seen the weekly and they've seen the month. On semiconductor, ON symbol, 53.67 out of 560. Very nice.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, we're back. Dow's only up 27 now. S&P's down 3 points. So this is going to be a real choppy week. I suspect that we're in for some kind of consolidation. That's what I'm saying. That's the key, but we'll see exactly what happens. We're looking at a question here in the den. Could I look at PayX? Basil, PayX, please. Zip. Yeah. So it's at 121.69. PAYX is called Paychecks Inc. Always call it PayX. Paychecks Inc., payroll, business, insurance, benefits, etc. It comes highly recommended as a company by many people that I've ever spoken to. I don't have anything to do with it, but we are long. we're along from the 113 area back in October the 5th. And it went all the way to 124.21. And then for 1, 2, 3, 4, 5, this is the sixth session, it's really gone sideways. And I initially said, everything about this looks like it's a peak D. The way it's acted, the way all the other, almost all the other stocks like this, and not the same sector, but that have had this kind of big move, have all kind of stalled at Ds in this particular fashion. And then because of Friday's close, a little doji close, again attempting, look, this is 124.21 on the 22nd of October. That's the all-time high. The very next day, the high is 124.05. Oh, the next day it's 123.98. Oh, the next day it's 123.96. Oh. Next day is 123.39. And then it has a 123.85 high. So within not even about a dollar, it's hugging this downtrend line, Chapman wave falling X formation. Today it opened at 123.28. That was the high, and now it's 121.67. So I changed my mind. I said, you know what? Maybe that isn't a D. Maybe this is good. Maybe this is going to go to leg C. It just needs a little pop up, and then it goes to 124.22, and that starts leg C. Nope, it did the opposite. It pulled back. So the question here is, so now what? Well, as far as I'm concerned, we haven't actually taken anything. Let me just go to this right here. I don't want to talk out of turn here. So PayX started along at 113.29 on October the 5th. Stop is 114.39. I said I haven't raised the stop yet. I wanted to see what happened, and I haven't taken anything off. So today we'll make this afternoon when market closes, I'll make some kind of a decision about that. But as it stands right now, this is really still, look at the peak E with a doji candle, Chapman wave silent doji candle last week, but still holding real well. So this is going to be important. If it starts to pull back under 121, especially if it closes under that, I have to say, you know what? It looks, there's a gap. The gap is way down the 110s. I don't think that this is in a major sell, going to a major sell. I think it's a digestive phase, but it could have the same Chapman wave falling axe formation as it had. That was 4 bars and consolidation before it broke out. It really took 6 bars, and the 7th bar is the actual breakout. This is the 6th bar. Let's see if there's a turnaround by tomorrow. If there isn't, I have to say, take something off. I don't want to get out of it. I think we got in at a great price. So I hope that helps you. Basically, if you're looking to start a new position, don't do anything yet. Let's see how it holds in the next couple of days. If there is a market move to the upside and I have to start a recount on the Dow Diamonds and say, you know, a leg G, you don't often get Gs at all-time highs. In the diamonds, you do get them for a short-term pullback, but usually it's an alternate count going to a G/C, then to a D. Let's hold off. There's nothing to do right now. If you're in it, you know what I'm saying. Let's give it some room. We've got plenty of room in which to take a little bit off. But in the meantime, I'm doing nothing. All right, so those are the parameters. If by Wednesday it's trading at 122.20 or higher, then it says, you know what, sideways consolidation is going to try at least to have one pop to the upside. Hope that helped you. NVIDIA, a couple of people at different places, emails and in the Tiger YouTube. Basil, NVIDIA all-time highs. Let's see, doesn't report until November the 17th. Thoughts of next couple of weeks action? Thanks. You know, this is really important. When I'm looking at stocks, and there are quite a number of stocks that are doing extremely well, and they're making highs, and they're only going to report in anything from 1 to 2 to even 3 weeks' time, that is really, really difficult. I mean, it's a lifetime in this market. You could have a pullback, and all of a sudden they come out with great earnings, and in the first hour of trading the next day, they've gone from a sell signal to a sell mode, and that hour it turns around and they make all-time highs. We've seen that time and again. In fact, we just saw it on computer. Look, on computer made a, where is it? It made a peak D and then an E in the daily chart at about 49.70, was that 49.78 on the 23rd, and then it pulled back to the 42 level, actually 41s. Well, I would say that 9 points, that's what is about 18%, but that's a decent pullback. And then it's just kind of going sideways, and then bam, today it comes out with news. Obviously, it must be earnings news, and it's up 5.65. So we've seen that. So NVIDIA, if you're going all the way to, what is it, the 17th you said? Yeah, November the 17th. It's a lifetime. It's in leg C. It had around number 250 low on Friday. Here it is at 257.84. Leg C, it's still going to go. It should still go to a leg D. I put this in the same category when I did my homework on the weekend. I put this in the same category as the QQQs. Look, you have the QQQs. Leg C. Where is NVIDIA? NVDA? Leg C. And it's broken significantly in the Chapman falling axe formation in that weekly chart in leg E. I might even have to rename this, but so far I'm calling it an E. And it's a leg F. But I'm going to do this because it's such an important stock. And you know what? It's an important stock in that whatever they've done, the whole semiconductor industry, other than one or two stocks, needs to follow this example, or they're in a different category. Because this could be an instant restart. It could be F/B in the monthly chart for NVIDIA. It's a monster. Monster is the next thing you want to look at. Okay. Yeah, it's an absolute monster. Doing everything right. So all I'm going to say is I would not be looking at November the 17th if I was long this. I would just be holding that position. I'd rather take a little bit off as it goes to all-time highs and have perhaps, instead of a huge amount, whatever it is that you're long, I would lighten that up and say, you know what, if it breaks and just skyrockets from here, fantastic. I'm in a good position. I'm making even more money. But to protect, in money management, as it gets towards the 17th, I'll be looking at it closely. I suspect it could pull back and go to leg B, and then it could have a 5 to 7 day consolidation, a pretty deep one, going maybe into the gap in the 236 area. And then as it's getting to the news, who knows? It could be at an all-time high. So I would just handle it day by day, or in your longer-term position. I wouldn't make any changes. Stars are waiting. Now, 5.5. Basil, Chapman, this is our program.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Sorry, folks, I forgot to do this. I usually like to do it early. So the E-mini, the S&P E-mini 10-minute chart made a peak. I did use this phantom peak because I got the little hiccup right there in the unbalanced volume. So I used it, and fortunately that was a peak D right there at the high today of 4619.50. And then it came down, everything crossed negative, and it's now at 45.91, it's down 525. Also, the 1-minute chart gave nice signal. That really was a nice signal. Peak E right there. No, but the original one was way back. Where was it? I forgot. I think, I notated it. There it is. A peak F right there at about 7 o'clock, 7:10. That was at the high, and then we saw it come down. So far, that says if the E-mini, December E-mini, S&P, let's go to the 10-minute chart, closes any 10-minute bar underneath the low that sudden spike down at about 10 to 10:10? Yeah, just past 10 past 10 Eastern time to the 45.86 area. If there's a close under it, then you're going to get this left side, right side price time match, which I drew in. I didn't have enough bars to the right. Now I do. And that says by 11:20. If you take that out, be careful, because the low that was made, that was at 3:20 on the 29th of October, the low of 45.81, round number low, before we went to peak E, that will become your target. So just watch that. If, in fact, by about 12:30 to 1:30 this afternoon, there's a sudden rally, and that rally takes you to the 40, you're at 45.92. It takes you over 46.02. That would be a good sign. That'll actually be a very good sign. So those are the parameters to watch. Let's get back to our story here. A lot of questions. So Monster is MSTR. Funnily enough, we were talking about NVIDIA as a monster. I used to have this all notated. It doesn't matter. It takes a second. Let me just do that. We would identify the low bar. That's the low bar. So what do we look for from the low bar? And especially here, you see this, the way the MACD, the reason why over all these decades I put the MACD over the slow stochastic. Remember, I never looked for all these indicators. I didn't go out there saying, I'm going to develop an indicator. All I do is observation. And at a certain point, I said, you know what? When that stochastic goes from very low, under 20%, and screams with the price moving up, and the MACD makes a very wide move between the 9-period differential and the 26-period slow-moving average, you can get a huge move in a leg A, a very quick leg B, a very quick leg C, and then it takes a little while because the torque of the stochastic going from under 20% to over 80%, in fact to 90%, is so powerful that you can now go into overdrive, and it takes a little while to get to D. Well, it didn't take too long. It took 4 bars to get to peak D. Peak D. In Monster, this is MicroStrategy Inc. Just a MSTR is the symbol. That's why I call it Monster. At 74.98, up 26 up 3.76%. It makes this peak D. And yeah, technically, yeah, I suppose I just have to do this. I have to put a down arrow because it did go under the 14. The MACD went weak, stochastic's very weak, on balance volume's weak, and the 9 period is still above the 14, and that's a good sign. So technically, I put the down arrow, but if it makes a new recovery high above that peak D, I very often eliminate that. I change that to a plus sign, because a lot depends on this 9 over the 14. And then what happens, it goes to an E, and then I put the down arrow, and almost always you get the cup formation and a very sharp pullback. I don't know if that's going to happen, so I'm just saying. So I don't even know why it was mentioned. Let me go to A, B, C in the weekly chart. Huge move in the monthly. It's like a single A. No, this is A, 1, 2, 3. Just a 1A right there. Okay, and that's a B, and that's all it's done. A huge move to the 1300 area almost. Yeah, 1300, and now it's pulled back to the 400s, to the 14-period exponential moving average, and now it's bouncing nicely to 742. So it's in play, huge moves in play, but basically sideways, making higher highs and higher lows, but just kind of stuck in a range. I suspect that whatever MicroStrategy is doing right now, having come off that 200-period moving average so nicely, is forming a pattern that I'm going to draw in right now. Let me just do that. Higher highs and so lower highs and lower lows. And now we have to look at this as if it's a potential Chapman wave falling axe formation, and that would become positive if there was a close in MicroStrategy, MSTR, a close that is, above 754.82 to 761. A close in that area says, aha, you should test the peak D high of 777.07 and made in mid-October. But any pullback from here with a close under 705 says, arch formation, be careful, you retest the lower Friday. So that's that. I hope that helps you. ARKK. ARKK, this is Kathy Woods. Is it Wood? I still never remember. I think it's Woods. Kathy Woods ETF. Yes, this is in play, and it's in play within a trading band between 132-ish and I'd even say maybe 118. It's trading 115. It's trading at 123 right now. It made that peak D. I'm watching this closely because I think this is, let her do all the work. And for subscribers to opening call, I'm going to say, you know what? If you want to have something that has volatility, because she bought so much stuff on the way down. I mean, I don't know what her position is, but she must be she's had a really nice gain since the 106's low that was made at the beginning of October to the 123 area, 20-something% gain. But believe me, she's come down from the 150s, almost 160, down to the 100 area. So she's got a lot of making up to do. But this would be a nice way to play it. So the question was ARKK. This is trading at 123.64, up 2.36. I like the action. It's in a big rectangle, but I'm going to actually put the smaller rectangle right here and say, you know what? I think this week there's a chance because of its makeup that it could go towards the 126.32 high that was made at peak D right there on the 7th of September. But I wouldn't be surprised if we're looking at this in 2 weeks' time and saying, 118 or 119. Look at that. It went high and now it's come back and it's just stuck in a range. I think that's what we're going to be looking at. But going into year's end, I wouldn't be surprised if this has a really nice rally, but I'd love to see it come down to the Actually, I'd like to see it come down to the 117, 116 area to make a decision. And all I'm doing here is saying, treat this as if it's the portfolio that you really like. It has all these. I believe she was buying. What was she buying just recently? Stock that really took a dive. I just can't think of it offhand. But she goes into those things and she's taking the risk. And then what you want is for her to have taken the risk, had the big pullbacks, and now you're going to benefit as it goes up further. But that, at this point, That's the range I'm looking at. One segment to go. I'll be back. Whoa, a lot of questions coming in. I will look at the FXI as soon as we get back. Basil, Chapman, sound.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secure investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. Just real quickly as we're going to wrap up, because you're going to go to Larry Pesavento. You're going to go to, and Larry's got a full all-day webinar coming up very soon. Check it out. Should be one of those great events. Then you've got Thinkorswim. You've got Steve Rhodes, Dave White, Tom O'Brien. Check out my Opening Call, my daily newsletter. So, we've got only longs. We've got one short that's still in play and still making money. We'll see what happens there. But we are likely to switch to some shorts this week. Merck, quick question on Merck. Yeah, Merck is in leg D. It's had a great move up. It had that news. It's at 87.56. It plummeted from its news, that gap. It almost filled the gap down to the 76 level, and now it's at recovery highs. 88.31 was the all-time high, and today's high is 88.63. Isn't it amazing how many of these stocks we've seen go back to within pennies, months or years later? How does it know to do that anyway? So yes, I like it very much as a dividend stock as well as a pharmaceutical play. I think it's going to dip. I think you'll get a chance at 84 to 79 to get back in if you aren't in it. But if you're holding it, just hold it. I just wanted to say, so yeah, Kevin, hi Basil, any other reason outside of the Chapman Wave letters that give you reason for a digestive phase soon? I agree. It feels like we're ready for at least 300 to 500 point Dow points soon. Thanks, Kevin. So Kevin, all I can say is that over the years, you know, of all people, you know very well how many times we've had at least shorter-term plays at the peak DEF in the Chapman method on the daily. We've gone short. It's worked out. But the sheer power of the buying just takes it back to new all-time highs. And yes, we're still long, and we're still long-term, and we're still the diamonds, and we're still long shorter-term. We're taking a little bit of money off. I just think we're ready we're due, technically, on my work, we're due for some kind of a pullback. Haven't done anything yet. So I hope that helps you. I agree. And 500 points is nothing. If it's just 500 points, that's fantastic. I think it's going to be a little deeper if it does occur at all. So the Dow is now down 12. S&P's down. Have a wonderful day. Stay tuned. You've got Larry coming up. Should be a great show. See you tomorrow, same time, same station. Basil Chapman signing off. We'll do the news and then